Grain and oilseed markets have extended their rally once again, catching many traders by surprise. What started as a weather story has become something much bigger, with persistent heat, renewed geopolitical tensions, and growing concerns over a strengthening El Niño, all adding to the uncertainty. So is this rally being driven by genuine supply risk, or is fear starting to play a bigger role? And after such a strong move, is there still more upside ahead? I'm Johanna Bota, and joining me now to break it all down is Bertrand Oesterle, VP of Clearing and Execution Sales at StoneX. Welcome back, Bert.
Morning, Johanna.
So the rally keeps going. What's driving it at this point?
So as you mentioned, if we want to sum it up in just one word, fear. That's the word of the week.
Okay.
But it's a compounding effect of three main elements. So the heat, the hot weather that we've had recently in Europe, in the US, then the war effect once again, which we'll do a separate video for later on. And that's the resumption of the Iran-US war, the resumptions of the Ukrainian-Russian war.
Yeah.
And then on top of it, it's a bridge to El Nino.
Got it. Okay, so let's break them all down. Let's start with weather. What new details can you share with us?
So we've had quite a few samples of harvest there and there in Europe, and the consensus overall is that generally we hear the same story. So yields are disappointing to very disappointing, but quality is better.
Okay.
So we've had echoes from France, Germany, Poland, the UK, the Netherlands, for example. And in wheat, we hear that those yields are disappointing to very disappointing, but the protein levels are quite nice. So it would be some 11.5% plus in France. In Germany, we're hearing anything from 11 to 14%. So it's nice in that sense to hear that the protein contents are better. Similarly, in rapeseed, we're hearing from the UK or from France or from Germany that again the yields are disappointing to very disappointing, but the protein contents are the oil contents are quite good. There's some 43 to 48%, so some very high figures there and there. But when we look, generally speaking, when we take our benchmark, which is the Agrimer figures that come out, they are still indicating that the heat wave has had a massive impact. And when we look at Agrimer in particular, the maize crop conditions are just 41% good to excellent. So if we put them in perspective, they're down from 47% last week, down from 72% last year.
Yeah.
And when we think that we started with good to excellent ratings in France at 92%, we're down to 41. So it does translate that heat impact. Similarly for soft wheat, 65% good to excellent in France. And we've had the Agriculture Ministry and Argus putting out some figures this week. They're saying that the crop is 30.8 to 32 million tons.
Okay.
So less than the 33, 34 million tons we expected prior. Then we look at the US, and in the US it's the same story. We're talking about heat, we're talking about dryness, how it may affect corn and soybean. The focus on the heat is not as drastic as in Europe, in the sense that it's a GMO crop, and we also had some updates from the USDA on crop conditions on Monday, and those figures were slightly better than anticipated.
Okay.
And the last bit I would mention on the weather is Argentina, where they've got some rain concerns for the harvest progress in corn. So they've got potentially too much rain when everyone else in Europe is begging for rain.
Okay, so the heat impact has been real in Europe then. What can you tell us? You mentioned earlier a bridge to El Nino. What did you mean by that?
So we've got a compounding element. So we've got the recent story about heat, then the war that we'll discuss on a different video, and all this at a time when some people expect some harvest pressure, but that harvest is progressing very quickly, and it could be that we have a momentum on the bullish side that could simply bridge to the next big thing, which is expected to be El Nino.
Okay, got it.
And on the El Nino side, it's quite interesting because we're getting some updates and some worries from Brazil. So on the update front, the CPC, so the Climate Prediction Center, is mentioning that there is definite evidence that El Nino has strengthened over the past month, and they now put an 81% risk of El Nino being very strong from October to December. And that really puts El Nino into focus in terms of Brazil. So yesterday I spoke to our Brazilian colleagues to find out how people react domestically, what's the concern, what's the estimate, and the answers we had are something that we will have to keep in focus.
Got it.
They don't know if farmers are going to plant as much. Farmers have definitely shown some resilience in selling forward, so they're not as quick as selling a crop that is not yet planted as they would as previous years.
Yeah.
And the farmers are also uncertain about what the impact is going to be on the growth of the crop and the production eventually and the yields eventually.
Right.
Now, when we asked our colleagues how do you think it would impact in terms of area, they came back with a figure that was quite staggering. They're saying that in soybean, for example, some 55 million tons of soybean in Brazil would be likely to be affected by El Nino to a certain level or a certain degree. So it is still very difficult to assess that impact, but it is something that could have a real impact, a meaningful impact, as you say, and it is something that we're going to have to keep under watch.
Yeah.
Now,
but like you said, it's too early to judge.
It is too early to judge, and also our US colleagues are putting some caution on this assessment by saying that we should not forget that in Brazil they've got GMO crops as well, and one of my colleagues was saying don't bet against genetics, so it's an interesting element to keep.
Okay. Well, Bert, thank you so much for all that insight. And thank you to our viewers for watching. For more on AG markets and the impacts of the Black Sea and the US-Iran conflicts, be sure to watch our other interview with Bertrand. See you soon.